Brady Technologies, the London-based provider of CTRM software, has recently undergone some pretty significant changes. We'll be visiting with Mr. Chris Regan, Managing Director of Energy, to learn more about those changes and also look at market developments. So be sure and stick around. Hello, I'm Patrick Reams with Contact Advisory. Welcome back to another episode of Conversations with Leaders in CTRM Technology. Today we're visiting with Mr. Chris Regan. He's the Managing Director of Energy at Brady. Chris, thanks for joining us.
Hey, thank you very much for having me, Patrick.
Absolutely. We're looking forward to the conversation. So let's just jump into it with talking about recent changes at Brady. You've kind of reformulated the approach of the marketplace in terms of the commodities you cover and the markets. Can you give us an overview of what's going on at Brady these days?
So thank you, Patrick. So in terms of Brady, we're very famous for being a commodities and energy trading business. However, last year we divested our commodities trading business, and now that's completely separate. And Brady is 100% focused on energy and risk. And what that means is we've divided ourselves into three business units with a very specific focus. Our first specific focus is on energy and physical energy trading, which I very much am in control of with a number of products. And that means the scheduling of assets, it means the physical trading of power, the movement of power through the different countries in Europe. It means the algorithmic trading, all of that kind of physical element of, the real guts of energy trading. Separate to that, we have our ETRM business, or the kind of energy trading risk management sections. And we've got a number of products there which really look at the longer term financial trading that goes on with energy trading. So usually this is looking on a longer horizon, like next season, the season beyond. It's really where traders or the more financial players get their exposure to energy trading, and does not necessarily lead to physical delivery. Sometimes it does, but this is where people do their risk management for that kind of financial complex a year plus out. So very important part, but slightly different challenges that go on to the physical trading of energy, which is very bespoke and specialist. And then finally, we have an area where we cover risk of trading. So that would connect to multiple ETRMs or multiple short-term trading solutions. It would bring the trades out, and it would be overall consolidation of the risk being borne by your company with its energy trading and its positions. And that would allow you to manage counterparty credit risk, delivery risk, liquidity risk, and all of these things. And that allows us as Brady to serve our customers in all elements of the value chain of energy trading.
Right, right. Well, excellent overview, and I appreciate that. I do know from previous conversations with you and others within Brady that your Power Desk product that really kind of focuses on those physical markets has been very successful for you to date. Can you kind of give us an overview of its capabilities and the markets that it serves?
Yes, of course, Patrick. So PowerDesk is our short-term trading traders dashboard. You can trade from it. You can get your position report from it. You can have your asset schedules from it. It is the epitome of what you need to do in the very short-term delivery of power and all of the risks that are associated with it. We've sold it to a number of customers in different countries. We are live in the GB. We're live in Germany. We're live in France. We've got Belgium. We've got Holland. But we're also very, very strong in the Nordic regions, where we're live in a number of the Norway markets, as well as just about to go into Sweden. So the customers that we have on the Power Desk at the moment range from very large utilities with hydro, with renewables such as solar and wind feeding into Power Desk to be retraded, as well as we've got batteries live in the product, which is really exciting because I'm very, very much excited by the battery market, which I've been involved in. And we've also got people with customer businesses where they're trading their customers' demand. Now with Power Desk, what they're able to do is they're able to real-time track what is the ultimate thing you need to risk manage in short-term trading, your net open position, your NOP. So they have a live view of what they should be trading based on changes in their wind output, re-optimization of their batteries, new demand forecasts from their customers, movements in the market prices, and all of that is available to look at in PowerDesk and to retrade your position instantly from the product. There's no more leaving your dashboard or your trader tool to go to the client to trade. You trade directly from your position report, directly from the single view of exactly what all of your assets are doing, the markets are doing, and what you're able to do to risk manage your position. So it's a really, really exciting product. Now, our competitors out there, some use ETRMs to position manage. And then when it comes to automatic trading, which we also do, they will be separate from their position report and they might bolt on a product to close out their position. The strength of PowerDesk is that we integrate the position management tool, which is 100% accurate and gets everything right, with the trade automation tool. And what I just wanted to mention, Patrick, from my perspective, is in PowerDesk, we think about trade automation in two levels. Now, I would call it like Gen 1 Algo, okay, which we've got live at the moment. Gen 1 Algo, okay, is more rules-based. It's like heuristics. That's what's out there in the market already with some of my competitors. It's a little bit like if this, then that of trading. If the market moves like this, or if the bid offer spread moves like this, do this. But what we're also working on, which I'm incredibly excited about, is our Gen 2 algo, which is much more about recognizing long-term trends and applying it to the timing of a trade. Now, most people say, how fast are you going to trade, etc. But in energy, prices move a lot over a long period. So it's not the speed of your trade, it's the timing. So really exciting with our Edge product with the Gen 2 algo coming on as well.
Well, great. It sounds like you guys have done a lot of work there, and the market acceptance has been tremendous. But it also sounds like it's also being driven a lot by the energy transition that we've been seeing occurring over the last several years and the push towards net zero. Those are kind of what we would view as the mega trends in the industry. What other trends are you seeing out there that are supporting those, or even outside of those two mega trends?
Yeah, so I think about the mega trends that are occurring that impact the way that the short-term trading goes on. The first one that comes to mind that I think about as an interesting news story is GB based, but the Great Grid upgrade. If you saw the news on that recently, where National Grid of the UK are talking about the continued £16 billion investment. That is because as we move to a transition of a renewables and intermittent generation, we need to make sure that the power gets from where it's generated to where it needs to be, and we don't get grid constraints and we don't get excesses of power in some areas and then blackouts in others. And that need for an upgrade in our grid system is really obvious because we recently saw the imbalance price fall to a minus £128.11 recently,
Wow.
driven by an afternoon of high solar, high wind, low demand, etc. Now, we've gone through a period of incredibly high prices following the kind of political unrest in the East, but actually losses and risk, but also profits from things like batteries are driven by volatility between low prices just as much as high. So if you don't get that reinforcement to the grid, and as intermittency comes in, you need a trading desk that's able not only to react to all of the news stories of kind of Q3 last year, invasions of Ukraine and £1,000 a megawatt hour. That same trading desk last week was exposed to minus £128. So they need to be able to work in those two energy dynamics really, really quickly. And then I start thinking about, okay, what's driving these changes? The next energy kind of big complex that I like to think about is the German nuclear shutdown. And one of the headlines we saw recently is like they're announcing the final shutdown of one of the nuclear plants in Germany. Now, over this period, there's been lots of news about Germany using dirty coal plants and reliance on Russian gas to displace what were some of the most sophisticated and advanced nuclear units in the world. But it really accelerated the renewables ratio seen in that country. And so what we saw, I think, in the German market is a snapshot of where the rest of Europe's going, but they accelerated to it with their decision to shut down all the nuclear units. And when I say what's the future of those short-term markets, that's high liquidity, high volatility, high automation. And so for me, Germany and now GB, which is following, is a real good snapshot of the way the markets are trading, the requirements are up to date, kind of intra-second quick updates to your net open position, the ability to trade directly from your position report and client, the ability to automate, not just with our Gen 1 algos, so heuristics, but the Gen 2 algos that we're coming up with, which are much more about the learning the long-term trends and beating market price rather than just operating efficiently. So really, decarbonisation is at the heart of all of those changes that we see. And I see a lot of those companies out there talking to me and saying, I used to trade 400, 500,000 trades a year. I think in a couple of years' time, it will be 10 million, 15 million trades. And in that situation, those people are going to need completely different software systems for physical energy trading than they do for financial energy trading longer term, which is why it's really exciting that Brady has both of those offers. And of course, they can come together and understand their risk with our risk products as well, which would look at both.
Well, it certainly sounds like an exciting new world, particularly in Europe these days, given all the complexities of that market and the dynamics at play there. I really appreciate the insight, Chris. It's been a very informative conversation.
No worries. Thank you very much, Patrick. It was lovely talking to you again, and have a great time over there in Houston.
Well, I appreciate it. Thanks so much. So that's it for this episode of Conversations with Leaders in CTRM Technology. Be sure to join us again on this channel for additional videos in the future, or you can visit our corporate website at comtechadvisory.com. Thanks so much.